Self-proclaimed technology enthusiast Elon Musk recently took to Twitter with a poll seeking his followers' opinions on selling stocks. He claimed that he would sell 10% of his shares if they voted yes. His followers responded in the affirmative, and now, after about 2 months, he has finally managed to sell all of the 10% shares he had promised. Despite this, the Tesla CEO ended up with more shares than he had before he started selling. What is his motivation for selling shares? How did he end up with more shares? We'll answer these questions and more in today's video, so keep watching. Elon Musk finally completed the exercise of his management stock options and sold Tesla shares in the first week of November 2021. The famous CEO conducted a poll of his tens of millions of Twitter followers, asking if he should sell 10% of his Tesla shares. Much has been made recently that my unrealized gains were a means of tax evasion, so I'm proposing to sell 10% of my Tesla shares, Musk tweeted in November of 2021 to his 63 million Twitter followers. Do you agree with this? Of the 3.5 million responses, 58% said yes, meaning Musk, who promised to stick to the survey results, will keep his promise. However, a large number of sales that resulted from the fun Twitter poll were part of a strategy that we believe Musk implemented. Since Musk's tweet, speculation has been rife that the PR-savvy billionaire is not actually looking out for the government's best interests. It is possible that he not only did not want to sell Tesla shares, but it is also possible that he had to. Tesla shares rose by more than 54%, making Musk the richest person in the world. Forbes estimates that his net worth has risen to approximately $275 billion. Musk announced in a tweet that he would pay more than $11 billion in taxes, in response to criticism from lawmakers like Elizabeth Warren, who described Musk as a freeloader on social media. According to Warren and other top Democrats, billionaires like Musk avoid paying taxes. "I have no offshore accounts and no tax shelters," Musk said, adding that he can pay his taxes within hours. Everything is blatantly clear. Nearly all of his estimated $271 billion fortune is invested in his two primary companies, SpaceX, a private spaceflight company, and Tesla, an electric car maker. Musk refuses to take a salary, does not own any property, and has described himself as financially illiquid since asking his Twitter followers in November whether he should sell part of his Tesla shares. Musk was dumping stocks. Experts believe that this measure is part of a strategy to generate cash to meet a tax liability of more than $10 billion. He is expected to pay for the stock options he is about to exercise. That's because Musk owed a huge tax bill. He controlled 17% of Tesla shares, plus $92 billion in stock options that allowed him to get more at a discount. One set of these options expires in August 2022, which means Musk must exercise his right to buy the stock before then, otherwise the options will expire and he will receive nothing. The problem is that when Musk exercises his options, he will owe taxes because he is strapped for cash. Some options can be exercised without triggering immediate taxes, and proceeds from stock sales are taxed at lower capital gains rates. But call options, also known as non-qualified options, will certainly be subject to the much higher ordinary income tax rate imposed on non-qualified options. Musk sold $16 billion worth of stock last year and donated 5 million shares worth nearly $6 billion to a little-known charity in November. Overall, this is estimated at about $22 billion, including tax payments, cash in his pocket, and the gift. Despite this, he now owns 564,000 more shares than he did before the sale began. Regardless of his commitment to following up on a poll he conducted of his Twitter followers that asked him to sell 10% of his Tesla shares, a review of his sentiments suggests Musk is sticking to his guns. He has sold 10.1 million shares so far, about 7 million short of his target. That's because at the same time, he's selling his shares, exercising options to buy more, and doing so at a low price of $6.24 per share, less than 1% of Tesla's current stock price. Musk started by converting 22.8 million options into shares first, which is how options exercises work. He could pay $6.24 per option and get a share of Tesla stock, which sold for more than $1,000 last October. A stock option is a financial contract that gives individuals the right, but not the obligation, to buy a specified number of shares of a company at today's market price in the future. As a result, stock options allow executives to profit if the company's stock price rises, while also preventing them from losing money if the stock price falls because the contract is not binding. In the latter case, managers can walk away from the deal. The goal is to provide risk-averse managers with incentives to take risks in order to boost stock prices and thus their salaries. This is also beneficial to shareholders who benefit from a higher share price. However, this may lead CEOs to take undue risks with their company's strategy. No foreigner stunt business strategy. Musk has been accused of trying to manipulate the market to push stock prices higher. He is still dealing with allegations of this from the Securities and Exchange Commission, which began in 2018. Corporate insiders, including CEOs, can trade their shares as part of a previously announced portfolio management plan under the 10b5-1 guidelines. It is a regulation that has been enacted by the U.S. Securities and Exchange Commission to avoid being accused of insider trading. Subsequently, they must announce when and how far in advance they plan to trade. Hence, we believe the survey had a backstory and was more than just Musk seeking his followers' opinions and input on the issue of tax gains. Perhaps Musk was aiming to save cash for other projects, pay off his own debt, or avoid future taxes. Tens of billions of dollars may have been lost as a result of a recent proposal to tax the unrealized gains of America's richest people, although lawmakers are still proposing an 8% surcharge on adjusted gross income above $25 million, which could add billions to Musk's income. Tax liabilities on future option exercises and stock sales. The plan has been scaled back significantly. Musk received approximately $22 billion from stock sales, option exercises, taxpayer sales, and donated stock. He exercised another 1.6 million manager stock options, purchasing shares at $6.24 per share to pay dividend taxes, and sold 934,090 shares at the time of exercise. Stock options were taxed like ordinary income even though so much Tesla stock was sold. According to his bonus arrangement, he still owns a larger stake in the company because the options are taxed as ordinary income. He was selling stock to pay taxes. With each option conversion, even as he was dumping billions of dollars in stock to pay taxes, he was accumulating more stock at the lower options price, increasing his ownership of the company. Because he received options as his main source of wages, he is subject to a large income tax when he exercises them on the new shares he has purchased since November 8, and he owes nearly $5 billion in federal income taxes. He will almost certainly owe state income taxes as well. According to the files, Musk sold Tesla shares specifically to cover the tax bill. He also intends to exercise other options that will expire this year, and he still has 12.2 million options that are about to expire that he has not used. He will likely sell about 5.3 million of those newly acquired shares to settle his tax liabilities. However, based on his past experience, he would have almost nothing left. Musk sold 15.7 million shares for $16.4 billion. The total. He unloaded a total of 20.7 million shares, including designated shares. Despite exercising the options, he received 22.8 million shares, leaving him with an additional 2 million Tesla shares at the end of the year. He currently owns 172.6 million shares, or 17% of the company's stock, making him the company's largest single shareholder. Once these soon-to-expire replacements are completed, he will have 22.9 million fewer options than he had at the beginning of this action, but he will still have another 50.7 million options that will enable him to buy that many new shares. Musk may sell more shares in mid-2022, albeit on a small scale. In the end, he fulfilled his obligation by selling 10% of his shares, but he gained even more using options, which provided him with a round-trip stock ride that netted him billions of dollars in cash, the highest single tax payment in U.S. history, and even more. Tesla shares Elon Musk's stake in Tesla, and his $227 billion fortune is sure to rise even further in the future in 2028. His next major pay package, which should be much larger than the one he received in 2012, will expire. Whatever the reason, despite Musk's claim that he is willing to accept either conclusion, it appears that Musk was preparing to sell part of his Tesla shares regardless of Twitter's reaction. Why do you think Elon Musk sold his shares? What are your thoughts on stock options as a form of compensation for CEOs? Comment below.